That rand starting this morning around R6.59, a little bit of weakness coming through. It went up as high as R6.65 this morning, so under pressure here.
We've seen a little bit of a sell-off. The euro's come under pressure. We've seen a bit of bond selling in our local markets, as we've seen the bonds come off to significantly lower levels than we've seen previously. So we've seen a little bit of profit taking across the board. You're also seeing commodity-based currencies come under pressure this morning, ourselves and the Aussie dollar as point in check.
Do you see this, Brigid, as a temporary phenomenon, though? As Samantha was saying, loose monetary policy expected to remain in the United States, and that's going to put pressure on the dollar in the longer term. So is this just a temporary blip?
I think so. I think that what you've seen is a massive rally that's now seeing some form of profit taking. I think that this death of Mr. Bin Laden has obviously caused a little bit of concern around potential for terrorist attacks that may pursue, but I don't think that that's something that we are likely to see for now, but it is a concern that remains and certainly is driving a little bit of sentiment in terms of riskier trades. I also think that the inflation outlook isn't as aggressive as was initially anticipated, and the likes of inflationary hedges like the gold price and other inflationary hedges around what's happening on the oil potentially have been a little bit overdone. I mean, if you think that we're looking at slower growth in the United States and that potentially has been over-exaggerated in the oil price, we can expect to see a slight brief pullback as the markets have rallied quite hard over the recent sessions.
How about some of the other commodity-based currencies? Because we have seen those commodity prices coming off a little bit with that dollar strengthening. We were also chatting earlier, you mentioned that silver is coming under pressure because they are trying to curb some of the speculation in the silver market at this stage.
Definitely. There's been some increase in margining on the silver trades that have gone through. That's gone through today, and then there's another hike expected on the 5th of May, which is helping to curb some of the speculation that you're seeing. If you think that the amount of futures that are traded on silver versus what is actually mined is quite significantly over-exaggerated. So I think, that what's starting to equate is that the commodity markets are being very, very, very heavily driven by speculators, and I think that they're just wanting to keep that in check. So, for now, I think markets just having a brief pullback just around uncertainty, with regards to the United States. I think overall, though, the general impression still seems to be that growth momentum is slow. It's not as aggressive as we've been hoping for. The United States still remains on the back foot. The US dollar still remains weak in the bigger picture, and I think that we can still expect to see further strength come through from the likes of commodity-based currencies, and obviously with the euro potentially trading up to 150.
How about the growth momentum and demand here in South Africa? We've had some data out recently. We had the PMI out just a short while ago, which shows that it's still holding pretty steady from March's levels. We also had private sector credit extension data out on Friday, which shows that demand isn't picking up very fast in this economy.
I think that, your local consumers starting to come online. I mean, interest rates have remained relatively low for a long period of time, which has obviously created some form of opportunity, but not aggressive opportunity in terms of availability to spend cash and obviously access credit. The bigger concern really, I think, is in terms of the business sentiment around, the likes of transport, the likes of sustainable energy resources, etc., and obviously the cost push pressures that are coming from wage increases as well as increased tariff hikes out of Eskom, etc. So I think that those are all putting a bit of pressure on business, really looking at the sustainability around a growth forecast that is not that robust, and obviously therefore not extending the kind of credit that we were hoping to see. So I think you're going to need to look for indicators like that to see some form of turnaround in the economy. But that being said, I mean, if you look at the global markets, the UK issued their PMI today, even lower than expectations, and in fact came off quite significantly. So I think that overall, and from a global perspective, still very, very much within the doldrums and still remaining very slow to recover aggressively. And I think that that's where the concerns come in terms of our inflationary outlooks, the growth outlooks, and the kind of games that we've had to see being played by monetary policy committees worldwide.
Well, let's look at that monetary policy, because first of all, what does it spell for South Africa's monetary policy when we're going to start tightening rates? We also had the Royal Bank of Australia not raising interest rates. We did, though, have India raising interest rates.
That's right. India raised by more than expected. They raised by half a percentage point to 7.25%. So I think they've got a little bit more of a situation that's unfortunately has negatively impacted them from the fuel prices, etc., and the commodities. But I think from South Africa's perspective, as much as we have the cost push, it's not demand-led inflation, which I think is key. And I think secondly, the rand has been a big buffer in terms of our inflation, even though inflation came in slightly worse than expected over the recent data that we've seen. I think that it still remains relatively well managed within that target band. It still remains at 4.1, which is even below that halfway point at 4.5%. So we can expect to see interest rates remain relatively benign for now, and certainly keeping an eye on what's happening in terms of the growth momentum. And I think that that's key in terms of where demand-led inflation is going to come through. And obviously you'll see those numbers with the likes of private sector credit extensions, with the likes of consumer-led inflation, and then obviously the sentiment around business and consumers.
Brigid, you mentioned some bond portfolio outflows which were putting a little bit of pressure on the rand today. But if you look at the year as a whole, we're a third of the way into the year and we've actually broken even. So a couple of months ago we had net outflows of bonds and equities from non-residents. It's looking a lot better though as the year progresses.
Yeah, we've seen a lot of investors, specifically from offshore, getting involved in our bond market, buying right through from the 186s. It initially started in the very longer end of the curve, and we saw the 213s, 214s being taken up quite nicely. We moved into the 186s. We've seen a lot of play around that 10-year 208, and still persisting. Although that being said, today we have seen a little bit of bond selling, as the interest rates have come off, as we've seen all the buying from offshore. So opportunities to sell some of the bonds out at these current levels, depending on what your view is around inflation. I think that there's still an extremely good carry based on the fact that we've got a really great interest return in our South African bond market, and that will continue to gain momentum whilst the inflation and certainly the interest rate environment globally remains as benign as it is. So the funding currencies really coming from the likes of Japan, coming from the US, that are funding at almost 0.25, some up to maybe 0.75%. So relative returns still remain really good.
Brigid, the rand from here, what sort of range would you expect the rand to trade at in the short term?
Look, I think that there's still some form of uncertainty around what the ramifications are going to be with the death of bin Laden, etc. If there's any follow through in terms of terrorist attacks, those are the big risk factors. I think for now we can expect to see rand continue to remain relatively strong. We still are targeting 655 and 650. We remain within the bottom end of that band. Whilst we see foreign investment in our bond market, the momentum will remain in place. And I think that that's what you can expect for the foreseeable future. I think that once, we're starting to see dollars selling around above 665 going up to 670. So we can expect that range for now to be between 655 and 670 in the medium term.